What's going on, everybody? Welcome to Stock Watch Sunday. If you're tuning in live, it's a little early, but I figured why not do it a little bit early. I hear there's an important football game going on with a really awesome halftime show that I probably don't want to miss. So I decided to do it a little bit early today. If you're visiting this channel for the first time, welcome. This is Stock Watch Sunday here at Own the Chaos. My name is Brad, and every Sunday, normally at 8:30 p.m. Eastern Time, we talk about the stocks we're going to be watching throughout the week. Now, this is just a watch list that we set up for potential moves. It's not necessarily a buy or sell type of list that we create, but just to simply watch so we can make a plan and execute if that plan starts to come to fruition. So, again, welcome. Glad to have you here. If you're coming back, of course, welcome back. And, the only thing that I ask for during Stock Watch Sunday is that if you could give me a thumbs up, I certainly would appreciate it. And I do look at some of my viewers' stocks. So if you're interested in checking out this way, if you want me to check out some of your stocks, make sure that you're putting them in the chat over there, and I'll make sure that I get to them. I want to disclose, though, that sometimes because there are so many comments going on that I don't always get to the ones that people are talking about. So if you would like to, or if you're watching this at a later date, I certainly would appreciate if you just put them in the comments after the video goes up, and I'll be sure to get to those within 24 hours. I always reply to all of my comments, so make sure that you're putting them down in the comment section below if I by chance don't happen to get to your stock during the live stream. Okay, don't take offense to it. I promise I'm not purposely skipping over you. All right, so let me just welcome everybody here. What's going on, Bob? Hope, good to see you, McTag. I'm not sure how this is going to work out. How many people are actually going to show up because it's not on the same time as normal. Yeah, what's going on, Alan? Good to see you, man. So a couple of things we're going to go over this week. There's a lot that's been going on in the stock market, right? The overall stock market has been going down lately. A lot of it's been triggered by the coronavirus, and we'll talk about that. Also, there's more earnings that came out this week, and we'll talk about some of the earnings that went on last week and what to watch for as far as earnings are this week, and a penny stock or two. If you guys have been following me for a long time, you know that I cut my teeth on penny stocks, more specifically over the counter or OTC penny stocks. Excuse me. And I want to make sure that we continue to revisit that, and I never want to forget where I came from or lose my roots. So for those of you folks that are trading in the OTC, I still got one for you as well. So that is it. So let's go ahead and get to it. So the stocks that I'm watching, I got them all written down because there's so much stuff going on in the earnings. But Disney has earnings this week on Tuesday after hours. Mckesson has pre-market earnings on Tuesday pre-market. Yeah. And then Uber after hours on the 6th, which is Thursday. And then Peloton also after hours on the 5th. So we'll talk about those as far as earnings are concerned. And then we're also going to talk about coronavirus related stocks as well. And Tesla. We're going to talk about how Tesla is not done, and I don't think it's going to be done for a while. So let's go ahead and get to it, guys. And let me share my screen with you guys here. Whoops. Move it on over and pull up WeTrade HQ. So if you guys aren't familiar with WeTrade HQ, this is my platform that I created with my partner Jake, rather. And I have a few stocks pulled up here. One of them is going to be Tesla, obviously. So if you want to go to WeTrade HQ and follow along, or if you want to go see what WeTrade HQ is about, if you've never been a part of WeTrade HQ, it's absolutely free to join. If you want to check out your favorite stocks and then talk about them amongst your friends, plenty of people talking about Tesla, as you can see. And then also there's news that's readily available if you want to find out news about the stock, as well as some of the fundamental stuff as well. So again, this is all free to use. I know there's a lot of people that have to pay to use a platform like this, but this is absolutely free. And what I also want to invite you to do on WeTrade HQ as well is that if you're looking to learn how to trade in the stock market, and maybe you've been struggling for a little while, or maybe you just want to kind of step up your game, I encourage you to check out our trading mentors. You can kind of come over here and check this out. I myself am one of them. You check out Don as well as Cameron and the Profit Room. They all are excellent traders and all are excellent teachers. If you guys want to go check those out, please feel free to do so. Links are also in the description as well. So getting on the Tesla, as you guys might know, Tesla had amazing earnings on Thursday and just just took off like a rocket. I mean, it just couldn't help itself. It kept going, even throughout, a poor stock market performance overall. But they beat earnings. I predicted earnings to be at 225 on last Monday. Turns out it was 214, so it was just off by 11 cents on earnings. And so you saw this huge gap up. Now, a lot of times people will be asking, well, when's the gap going to fill? And sometimes the gap just doesn't fill, and you can see this in two examples here on Tesla where the gap doesn't fill here from when they announced. I think this was right around the time they announced that they were better than expected. Delivery rate on their Model 3 was right around here earlier in January. It gapped up from 509 all the way up to about 528. Never came back down. Okay, in this situation or this example here, you see where it gapped up here on the 22nd from 548 all the way up to about 561. Ended up closing that gap down here back down again to 542. And then continued to go up. And this huge gap here is obviously that earnings call where it actually ended up after hours going up as high as 660. I can't believe I'm saying that about Tesla a month after I put a video out saying that, I thought this could see 1,000 by the end of the year. I didn't expect this to go this high this soon, 1 month into 2020. But nevertheless, we've been making some excellent trades on this. If you've been investing in Tesla, obviously you're a happy camper as well. And I think that this has room to continue to grow here too. And I think this is a situation where the gap doesn't fill. I mean, it's right here, had highs of 653 on Friday, and it looks as if it's really, really bullish. Actually had a really strong move. If we go to the 5-minute chart on this thing, you can see that it had a really strong move right at the end of the day. I would say the last 20 minutes of the day, this was getting bought up like crazy on the 5-minute chart. And you can kind of see where, some supports and resistances were on the 5-minute chart here, right around 5:30 or 6:30 rather. I'm so used to saying 5:30 over the last couple of weeks. 6:30 and then up above 653. So I think this ends up breaking up higher and potentially goes to those aftermarket highs around 660. The reason that I think it's going to keep going is because of what the outlook was on the earnings reports. I think that at this point, as crazy as this sounds, it's still undervalued. And the only way that I think that this is going to come back and even remotely try to test this gap fill here is if it breaks its support around 632. Really, this is all we have to go off of from the chart perspective. So the only thing that I can give you right now as far as the fundamentals is that outlook. They're already putting the semi truck in production. They're expected to have a few of those out and produced and shipped by the end of the year. Model Y's ahead of schedule. Everything's going awesome with the Gigafactory in China. Now, I know that the coronavirus has kind of stunted things a little bit there, but I don't expect that to really matter at all, really much. They said probably about, a week or so that they would have to keep everything on lockdown, but it is what it is. I mean, that's in Shanghai. Shanghai isn't even really shut down, so I think they're just doing it as a precautionary, which they should be doing, precautionary measure. So everything else, their energy sector, they're ahead of the game with that. I mean, there's just so much going on the fundamental side of Tesla that this isn't over. And I would only be worried about it filling that gap, like I said, if it ended up breaking the support around 630. So that's what you want to look out for Tesla. If it breaks over that previous high, and I'll share this to you again, this breaks over that previous high around 653, then this should probably move. It might even move above 653 pre-market tomorrow. Who knows? We'll see. But I wanted to make sure that I got on Tesla, and we talked about that. And there's a couple of earnings plays that I want to talk about as well. But let me check in with you guys in the chat, see how you all are doing. Let's have a fun green week. Yeah, I'm with you there, Bill. What's up, Anthony? Good to see you. What's up, Jonas? Kenneth Rosenberg, good to see you. VXRT, yeah, we can talk about a couple of those coronavirus-related stocks. Alan made good money on VXRT. Yeah, he called it in the mentorship as well. Maybe I'll make enough money with Tesla to buy their truck. Yeah, I'm definitely. I don't know if I really am interested in the truck, honestly. It still hasn't grown on me. I'm in the market for a Model S, I think, but not so much the truck. What's up, Daniel Spear? Good to see you as well. All right, so moving on to what some of the earnings plays are worth looking at is one of them that I'm looking at is Mckesson. So this is ticker symbol MCK. So Mckesson right now, their estimated earnings per share is $3.52. Revenues estimated around $59 billion, up 5% from last year's revenue. They're a drug distributor, med-surg supplies, logistics, as well as prescription technology. So, I think right now with the way the markets have been kind of tanking over the last few trading days, that this is a good opportunity for some of you to perhaps take advantage of these shares on the cheap, especially if they end up beating earnings. And there's a lot of positivity surrounded around Mckesson that this could definitely end up happening and beating earnings. If that does, we should see a really, really nice move. Now, this is a daily chart of Mckesson. We haven't seen any moves like that since about 2018, 2 years ago this time, really, when it went up above 179. We could see a move like that, but I'm looking for one thing. I'm looking to see how the market reacts once futures open and all of that, because I want to be able to buy this even cheaper. So when I'm looking at this, I'm looking and seeing how Mckesson's going to react to the rest of the market on Monday. I would expect there's probably going to be a considerable gap down in the market as a whole. I would, once futures open, I think we'll see, some pretty decent red moves. But I honestly, there hasn't been a time in our history where, an outbreak really affects the stock market in the long term. So I'm taking advantage of the emotional reaction of others. I don't know why people are selling, like this really over coronavirus. I still think the coronavirus is an overreaction. I mean, guys, when you think about it, okay, when you think about something like the coronavirus, it's serious. And I even put out a video about that. Yes, it's tragic that people are dying from this illness. But when it comes to things like Ebola and, bird flu, swine flu, all those other ones, they've been contained in a reasonable amount of time. And we're still within that window right now. And, I think everybody it almost seems like to me that everybody's just kind of hoping that this is like some sort of the sky is falling type event, where, I don't know, it starts to create zombies and everything else. You just see all kinds of crazy stuff on social media, and it just instills fear. In this case, in this situation, fear is always stronger than greed. So you have to take the greed side of things, right? Go and buy the red. And so, but you have to wait for the appropriate time. And I think that we're not there yet. And I think that we're still going to continue to sell off on Monday. We might even go into Tuesday, but look for an opportunity on Mckesson because of that reaction. If there's positive earnings, this gives you an opportunity to get Mckesson shares on the cheap. So if we go back and look at the chart, it's one of those things where you see 134 is a good support here. And I think that if it holds that support, that's probably where I will enter and perhaps hold this into earnings. Now, one thing that I do want to, elaborate on is that earnings plays are very much a gamble. Sometimes they work out, sometimes they don't. And it doesn't even necessarily matter whether or not they beat earnings or not. Boeing is a perfect example of that. Boeing actually operated at a loss for the first time in 22 years, and then the stock went up. So, but most cases, if you do your homework and you can, feel confident in the fact that perhaps this will move in the direction that you think it is, and if you're taking an amount that you're going to know that, going into it with the understanding that this could end up backfiring on me, as long as you have that plan and you have that understanding and that level of risk is there, then, I'm one that's kind of like, you have to understand the risk in trading earnings, but should you trade over earnings or not? I think there's certain instances where you can. I held over Tesla earnings because I was that confident in what Tesla did. And, look at what happened to that. And if I had paid a little bit more attention to Amazon this past week as well, Amazon went up $220, gapped up over earnings. So there's definitely money to be made over earnings. You just have to understand and know what the risks are when trading that sort of thing. So, host says most people who contracted Ebola can't afford shoes, let alone a plane ticket. Yeah, but Ebola did make it into the U.S., to be fair, and we contained it, and it was fine. So, again, swine flu killed a lot of people, 150,000 people, in fact. and we contained it. Everybody was fine. Stock market had an amazing year. So bird flu, same thing. All of these illnesses, they present opportunities in the stock market, but I don't think it's going to crash the stock market. So nevertheless, moving on to Disney. Disney, I think, is going to do very, very well. I see that somebody was talking about Disney already. Looking forward to my Disney calls, Boomage. Yeah, I think Big Apostle, I think that you may be on to something there. It's holding a very, very nice support here at 134. Now, Disney, this quarter that they're going to be reporting on is going to be the first quarter where Disney Plus actually went live. And then, so if you look at Disney Plus, just Disney Plus alone, not including anything else they had, 10 million subscribers in their first day that Disney Plus went live. Analysts are expecting 20 million total. I think that number is actually higher. Their estimated earnings per share are from FactSet at 147 per share. FactSet also estimates that 20.7 billion in revenue, up from 15.8 billion last year. So I think that it's safe to say that Disney Plus is definitely going to be a big factor here, and I think that subscriber count's really what's going to be the big factor as far as whether or not Disney does well. I don't know if it's. I think the price of Disney stock will be impacted by earnings, but I think the real kicker here, or the real X factor, is going to be how well did it do on Disney Plus, because it's going to cause a chain reaction with all these other streaming services, such as Amazon, such as Netflix, especially, I think will be impacted the most. Roku, Hulu, all those, they're going to be impacted by the numbers that come out on Disney's annual report. So they're after hours on Tuesday, which will be February 4th, is when Disney earnings come out, and that's what I'll be looking for. So again, if we look at the chart, and if it reacts to the stock market, as I'm sure it will, just as it did last week, this downturn on Disney was, it was just another reaction to all the other stocks that were doing in the market. And so I think perhaps this comes down to maybe around the 120s if it reacts to the rest of the market, which again will lend itself a really good opportunity to be buying some Disney stock on the cheap. Now, again, like I said, we're looking at earnings here, and so you have to understand the risk. If by chance they don't end up beating earnings, this could spell bad news for Disney. But in my opinion, I think that Disney's going to do rather well, and I think that these estimations of subscriberships are actually probably underestimated. I think that there's probably a case that could be made around 22 to 25 million subscribers, whereas analysts are expecting 20 million, and who knows, there could be more. Could be more subscribers because, Verizon is giving you, if you're a Verizon customer, you have Disney Plus for free. So I think that, we'll see where this goes, but I think that, this will lend itself an opportunity to grab Disney shares on the cheap. As you can see here, if you go all the way back to April, this has been a super strong support right here at 127. So you go back to April last year, 127 seems to be where you could get some shares on the cheap. And I think that you could make a case for holding over earnings if you're able to get shares down this low. So we'll see if it actually breaks this support at 134.5. And if it does on Monday, I think it would be a good idea, in my opinion, to go ahead and get some cheap shares here on Disney, because I do think, in my opinion, that they'll end up crushing earnings. If nothing else, they'll be crushing the outlook for 2020 based off of their Disney Plus numbers. So that is Disney. Let me check in with you guys here. Snap also has earnings on Tuesday, Mohammed. Yeah, and Snap actually isn't on here. The only reason that I didn't have Snap on here is because they're not expected to have any earnings. They said they weren't going to have any, no earnings to the up or downside. They were basically going to come in at zero. So 0 earnings per share is the expectation for Snap. So that's why it's not on here. And you can pull up the chart. The chart isn't really all that great. It's nice and cheap, which is attractive to people who are, trying to day trade something like this so they can scoop up a bunch of shares. If by chance they actually end up beating earnings, it could be a nice move for Snap, but I don't think that that's going to happen. I think more than likely they end up missing and could very well potentially be operating at a loss going into quarter 4. We will see, though. I'm not saying that they will or that it will happen, but it's a very tough call at this point. and I would say it's 50-50. You want to talk about something that's throwing it right on red or black as far as earnings go, then you want to go ahead and play Snapchat. So it's just, I don't know. This is one to be extremely risky, and if I were going to risk money on something that I knew was of high risk, it would not be in Snap. So that's just kind of my opinion. But, again, you can do what you want. You know what the risk is and all that good stuff. And so the next one, as far as earnings are concerned, is Peloton that I'm looking at. Peloton has earnings on February 5th after hours, and I was really having a tough time, finding, some projected numbers on them. But I will say that they're up considerably as far as subscriptions and workouts are concerned. Obviously, in quarter four, they had Christmas as well. They had the Christmas holiday. So I'm sure that they did very well in quarter four. So I expect Peloton to continue to do well after earnings, and they come out after hours on the 5th. They're outpacing their competitors such as NordicTrack when it comes to sales and subscriptions. And one thing that I thought that was interesting about Peloton, as far as investors keeping track of numbers, is they actually know how many hours their subscribers are working out each month. So when you look at it, I just have the numbers here. When you look at it, 11 and a half workouts per month from their subscribers is what the average is. And that's actually up by about 3 to 4 workouts per month from 2018, and then even more so from 2017. So that's how the investors are trying to keep track of this, because, not only do you have to buy a $3,500 bike, but then they also try to encourage you to pay $40 a month to be a part of their workout program and stuff like that, which is just insane to me. I really don't understand the purpose, but nevertheless, if we look at the chart looks fantastic. And you see here where this is on the daily chart, where it's growing up on a really nice trend, has been rejected at this resistance on the daily at 32.64, and with earnings coming up, I would expect this to break up over this resistance and continue to move up over earnings. I'm not sure if I'm going to hold over earnings on Peloton or not yet. The verdict's still out on that, but you can bet that I'll be keeping my eye on it this week for it to break up over this resistance and see if I can't just play this off of some momentum and maybe be out of this stock before earnings come out, or if I'm not out, at least take some profit and, hold some extra shares just to kind of see what happens, so to speak. I'm not going to go all gung-ho and hold Peloton overnight just, because I'm that confident in what earnings are going to look like. But it's kind of hard to, argue that they probably end up having a really, really good fourth quarter just because of, the holiday and everything else. So this is a little bit of a wild card as far as earnings are concerned, but I thought this was an important one to bring up for those factors. And so you guys can make that determination yourself, obviously, but you can see this is on a really nice trend right now, and it has that resistance here at 32.50. So be on the lookout for Peloton to make a really nice move, at least leading up to earnings, and then we'll see what happens afterwards. All right. So let me check in again with you guys. Yeah. Hope says she paid a few bucks extra to upgrade to free Disney for Hulu and ESPN. So yeah, there's lots of incentives for Disney Plus users for sure. Anyone else planning on shorting Grub? Yeah. So by the way, King Bradicus, love the name. I had Grub on my list. I didn't actually do enough work on it to really have an opinion on it. So the next one that I was going to talk about was Uber. But if you want to give me some info on Grub, we can certainly look at the chart. And I'd be happy to go over that one with you. I think Grubhub is on Thursday, if I'm not mistaken, for earnings. So yeah, if you can give me some more info on that, just to kind of, be a little bit more efficient as I'm going over Uber, I certainly would appreciate that. And speaking of which, we can talk about Uber, who has earnings on after hours on the 6th of this month, or this week even. So Uber is expected to have 68 cents earnings per share, 4.6 billion in revenue. That is their expectation. Lots of analysts have their price target at $44.83. Here's my opinion on Uber. Okay, I think Uber actually ends up having a decent earnings report, but I don't like the company. I hate the company. The company it reminds me way too much of a WeWork. It reminds me way too much of, a lot of these other tech IPOs, the only real tech IPO that I was a big fan of that actually ended up doing well was Zoom, believe it or not. Zoom did fantastic through their IPO. That was the only one in 2019 that I was like, yep, they nailed it. Uber and Lyft, WeWork didn't even get off the ground, but the practices that Uber and Lyft have are the same practices that WeWork has. They have a huge spending problem. You know, they increase revenue year after year, but they still suffer, you know, greater losses year after year. And it's just, I don't know. I just don't like it. The other thing I don't like about it long term is when Tesla actually comes out with their fully automated vehicles, which they will, and they start to implement transportation as a service, such as taxis and stuff like that, automated taxis. Uber's done. They're toast. But in the short term, I'll humor you. For you Uber fans out there, in the short term, I think they actually end up doing well, and beating these earnings. Probably not by a lot, but they're going to be operating at a loss, a 68-cent loss earnings per share. They're not profitable yet. I don't expect them to be profitable here, but I think they do beat earnings. They probably operate at a net loss of around, I would say, 58 cents per share. If it's 58 cents per share operating loss, then Uber probably ends up doing well. And yeah, maybe they end up moving back up into this $44 range. But I think a lot of these analysts had too much faith in Uber in the beginning, and they're probably setting these price targets here so they can get their asses out, because I don't think Uber is actually set up to do well at all, unless they change their business model and unless they take care of this spending problem that they have. I'm just not a big fan of it. And I know that's an unpopular opinion, but when you look at the fundamentals of this company and you really dig into them, it's pretty terrible. It's pretty bad. This isn't a really good managed company at all. So, maybe they beat earnings, maybe they don't. But if you look at the chart here, you can see how potentially if this starts reacting with the rest of the market on Monday, they could end up probably scooping up some shares at $33. And there's a pretty tough resistance here at $38.15. So, if it comes back to this $33 range before earnings, that could end up yielding itself to a good opportunity to get them on the cheap. And then if they end up beating earnings on the 6th, then we should see a nice move. And then if it pops up over $38, this should continue and then actually end up reaching that $44 or $42 range. So that's what I would be looking for as far as Uber's concerned. But again, like I said, I'm not overly confident in this stock, but I thought it was worth mentioning just because I know it's popular and I know a lot of people probably had questions about it. So, that's my sentiment on that. You can see what WeTradeHQ sentiment is, which, by the way, if you're on WeTradeHQ, you can certainly vote what you think it's going to do. We'll just go ahead and I'll continue to be bearish on it, even though I think they end up beating earnings this time around. We'll see where it goes. But, if you want to vote on it, you can come over to WeTradeHQ and vote and see how your favorite stock is seen by our WeTradeHQ community. So let me check in with you guys again. Financial education. Jeremy loves Uber. I know he loves Uber, but he still can't answer that question as far as Tesla's concerned. Castamere. Yeah. Same thing. Robo taxis will kill Uber. And I don't think it lasts. I think Uber's days are numbered and Lyft too. So, I respect Jeremy. I respect Jeremy a lot, but I'd have to disagree with him on his outlook on Uber, in my opinion. So, have I looked at WWD? I have not looked at WWD yet. But Grub tanked 43%. So, okay, let's look at this one. Actually, you know what? I'll keep it in mind. You know what? No, that was my last earnings play, so that we'll get to the other stuff in just a second. But since we're still on the topic of earnings, Bradicus, we could talk about that. So you said Grub tanked 43% last earnings. Not sure any positive news has come out since then, other than rumors of company getting sold. Let's look at Grubhub. I think it's just Grub, right? Yeah. So we look at Grubhub here. And yeah, it's trading at 54.15 is where it closed at last week. And yeah, you can see this huge gap down last earnings, and it's actually ended up working its way back up. So if earnings end up being poor again, you can expect a huge drop down, probably even lower than this $32 range. But it looks like, I mean, trend-wise, it looks fantastic. If I'm looking at this from just a pure chart perspective, sorry, I can't talk today. You can see how this actually doesn't look too bad on the chart, right? And so if this actually ends up doing well, if this actually ends up doing well on earnings, then perhaps we see a nice strong move. If it breaks out of this trend, I would say if it breaks out of this trend up above $62, I mean, it should really get a move on. Some people could probably argue that this was just trying to close a gap here, and maybe that's true, but usually it ends up closing the gap a little bit sooner than that. And it's held up here. After it closed the gap, it's held up here quite nicely. So I would be looking for breaking the trend somewhere. When's Grubhub's earnings come out? I think it's later in the week, if I'm not mistaken. Nobody was able to comment on when it was, but I think it's later in the week. Thursday is jumping out at me on Grubhub, so be on the lookout for that. This one would probably one, in my opinion, that's probably extremely risky, Bradicus. So, Wednesday after close. Thank you. So, Wednesday after close, this one wouldn't be really risky. Perhaps if you can monitor this, I would say it probably ends up breaking out of this trend before it goes back up. So, if you want to, pay attention to perhaps decent support to grab them on the cheap and see if it ends up running into earnings. Maybe you could grab some around $51, and then if it can't hold that, then maybe around 46. I doubt it comes all the way down to 46, but nevertheless, you can see over the last several days, it's been moving with the market just like a lot of the other stocks. So there's definitely a possibility it could break this trend for the first time since middle of December. We'll see. We'll see where this goes. But again, like I said, if it ends up breaking out of this trend, look for it around 51 and then again around 46. And then I would be very cautious about holding this over earnings if I were you. Is it now time to buy 3M and FL? So now that we're off of earnings topics, Mr. Alamat, I'm going to actually address this real quick because that's our next topic. So we're going to talk about the coronavirus stuff right now. And so I really like that you brought up 3M. So 3M actually, in my opinion, would not be a stock that I would be playing as far as coronavirus is concerned. I would assume that that's the reason that you're bringing it up. But in my opinion, I think 3M just has so much else going on as far as a company is concerned that they're not directly focused on medical supplies such as masks or Tyvek suits or anything like that. So when you're looking at something as far as a relation to an economic disturbance such as the coronavirus, you're going to look at something that's a little bit more focused solely on things that are needed when you're trying to, quarantine, areas, regions, and that sort of thing. 3M, in my opinion, probably not going to be the one that I would go after. Maybe we see some movement out of that because of everything that's going on, but I don't think that's going to be the play, in my opinion. I think that if you look at APT, this is probably the one to take a look at. APT, and you can look here on WeTrade HQ. Alpha Pro engaged in business of protecting people, products, and environment, develops, manufactures, markets, disposable, and limited-use protective apparel products. Now, I went ahead and did some more research on this one, and APT actually sold out of surgical masks, and then now they finally got them back in. And so that's why you're seeing a huge movement on this. And so I think APT actually looks to me as if it's forming a cup and handle pattern here on the 30-minute chart. So I think that if it breaks up over 688, we should continue to see a nice strong movement out of this one. This is what I'm talking about. Things that are more specific. 3M, they have so much other products and, sectors that they focus on that they're not directly connected to the medical field as much as like an APT would be. And if you guys are curious about other tickers that you may want to take a look at, and I can put them in the chat here, if you guys want to take a look at other coronavirus related stocks. Yeah, NNVC, John Wilson, that's a good one. And actually, I was going to put that one up. So NNVC and then AEMD, definitely worth, not AMD, AEMD. CODX, and I didn't want to get into all these just for the sake of time. And yeah, so NNVC, AEMD, and CODX are ones, and mRNA, I think, was the other one. Let me just confirm that. mRNA, I think, was the other one. I actually traded mRNA. They're actually looking to, they're developing a vaccine. They were given a grant. Yeah, mRNA was the other one as well. So I'll put that in the chat. Those are ones you're going to want to keep an eye on as it relates to coronavirus. So that is what I would pay attention to. APT current resistance at 690 needs to break above 690 to be a buy. John, I would agree 100%. And actually, that's what I was going to talk about on APT. But you can see that it's developing a really nice cup and handle. Sometimes when you see this, and I'll go back to the 30-minute chart, you see this looks like a teacup, right? So this is the top of the cup, comes down. You can see this is where the contents would be if you're looking at a teacup, and this is your little handle here. So lots of times you'll see a really nice bullish move, but I would agree with you that 690 ends up being the support, or the resistance rather, right here. So then if it breaks up over 690, this should continue or signal a nice bullish move out of this one, and then try to attempt to break those highs above 780. And then if it even breaks that, it's blue skies after 780. So be on the lookout for APT. That's why this is the one that I like the most, because it just had the best setup out of all the coronavirus related stocks. I think this is the one that had the best setup fundamentally and technically. APT is the one that I would probably put my money on as far as any of the coronavirus related stocks. And then finally, I wanted to talk about PASO, and I'll get your guys' questions in a second. But PASO, I told you guys that I still trade over-the-counter penny stocks, and this is one that's been on my radar. And for whatever reason, I couldn't get this pulled up on WeTrade HQ. I'll make sure that gets addressed. But I do have it pulled up here on Thinkorswim. But if you notice here on PASO, you can see that there's been a pretty decent amount of accumulating going on here. The price hasn't really moved all that much, but there's been a lot of accumulating of the stock. You see the volume here. It's just been extraordinary over, I would say, the last 2 weeks, a week and a half, 2 weeks. You could see where volume was, and now it's just been steadily being accumulated here. And I think something might be going on. If you guys don't know how to trade over-the-counter penny stocks or penny stocks in general, one of the key things that I look at when it comes to penny stocks is unusual volume. And this one popped up on my unusual volume scanner. I have a scanner that scans for these types of things. Showed up on my unusual volume scanner, and then I went to work. I did some digging around, and it was like there wasn't anything that I could see from a catalyst standpoint that was actually going to show up. But I noticed that they were experiencing some dilution, and that the amount of dilution has been pretty heavy over the last couple of days. Sometimes that can signal that dilution is over or very close to being over. Usually when you have a diluter that comes in, they're not going to just trickle in a little bit as it gets closer to that maturity date. Usually when you get to the last couple of days, they just do a massive dump. And then the dilution's over, and that in and of itself can be a catalyst. So even with dilution going on, you can see here, and I pulled this up on OTC Markets, that the share structure is actually still relatively good. You look at the OS is at 500 million, and with the price point that it's at right here at where it closed at 0114, this is a really good setup. Now, understand the risk. This is still the OTC. This is still a penny stock, so you know that this is a risky play, but I like these types of setups because sometimes they can yield some pretty powerful results, especially if the share dumping is over. That's what you look for. The faucet gets turned off. That can sometimes be in and of itself a good catalyst. And if any other catalyst shows up beyond that, then it's going to move even more. So be on the lookout for PASO. I think this one's definitely one to keep on the radar and keep on watch. And that is it. That is my actual list of stocks that I'm watching this week. I know it was a lot, but there was a lot that's happening in the market overall. So now I'll go ahead and get your guys' questions. Let's see here. KYNC PR released. Dan Spear, Friday. Jason Black, new director. New Hemp, 400 million. Share reduction, established non-dilutive funding. Joint ventures in the works, etc. OTC. Yeah, so let's take a look at this one. Dan, sure, we can take a look at that. I've been meaning to take a look at that. I know that you reached out to me earlier. So, yeah, it's trading at 0009. So one thing that I will mention about this is that anything that's trading in the trips is always going to be just viewed as a lottery type of play. So if you're going to play something that's traded at 000 anything, go into it with the understanding that you know that this is a lotto. Okay. Having said that, let's check out the news just to kind of verify this. So they came out with news about the board of directors, and you had mentioned that they got rid of them. Board takes a grave look at these acts. So they got rid of this guy. Substantive CEO would be invalid. Okay. So they're looking to do also a share reduction. Let's see here. What did you say? Share reduction of 400 million shares. That would be huge. Right now it's at 5 billion in the AS right now, and it's 3 billion, 3.6. So really, okay. So here, so even though 400 million is a lot, this is why I'm saying again that this could be a lotto type play because it is in the trips. Trips haven't been doing very well in the OTC for a while, right? Because volume's just been down. People haven't been trading the OTC recently, and I think a lot of that can be attributed to many factors, but a big reason is probably because the overall market's been doing so well, so people are just been trading big board stocks. But, you look at the OS here, and I'll share my screen again. The outstanding shares, I mean, they're going to reduce it by 400 million? That's 3.6 billion there. So the 400 million, while it's positive, it's barely going to make a drop in the bucket here. So I would say, in my opinion, KYNC, take it with a grain of salt. Understand the risk and that this is more or less a lotto play. If it ends up moving, great. If it doesn't and ends up going down, don't be surprised. That's how I would view KYNC. And KYNC has also had a lot of shady stuff going on in the past as well. So their history is not all that great. Yeah, I remember Alan did very well on it. And after it ran that 1,000%, Alan, if you remember, that's when a lot of controversy came out about it being really, really shady. So be on the lookout for that. Just extra caution on KYNC, okay? Okay, let me see if anybody else is asking about certain tickers that I can go over. Somebody said, let's see here, VXRT. Oh, yeah, VXRT was another one that was related to coronavirus. If anybody was interested. Would I mind looking at WWD? Yeah, we can take a look at WWD. Sure, no problem. WWD. So I believe you said they had earnings coming out. I think I saw those as well. Not sure what the outlook's going to be. Hold on. What were you saying about WWD before? Dip by at 114 and then ride it up. Have earnings this week pushing for higher highs. John, when are the earnings coming out for that, by the way? If you could comment, I would appreciate that. I can look at KWBT, Nathan, February 3rd. So tomorrow is when earnings come out on WWD. So, yeah, I would be cautious with this one. Is it after hours, John? I mean, as always, you always want to make sure that you're cautious on earnings and just go into it with the understanding that you know what the risk is involved here. But if I were to buy WWD, I would look for a move that could potentially come all the way back down, especially as you can see, just like everything else, this one reacts with the overall markets too. So there's definitely potential for you to grab some on the cheap at around $109. If the outlook's good on WWD, you can make a pretty penny, especially if it goes up above 117 or even above 124. Those are your areas of resistance there, especially if it comes back down and bounces off of this 110 area. If it continues to react with the overall market sentiment. So these are going to be some really good buy the dip situations, guys. And for you, John, I would say, okay, it's after hours tomorrow. So I would say look for opportunities for this to come down. And then if you can make some money on this on Monday, great. I would suggest taking some profit just to hedge your risk or manage your risk. And then, if you want to hold on to some shares through earnings, just again, go through it with the understanding that, it might not go your way. So any money that you put into it, go into it with the understanding that I'm okay if I lose all of it. You just have to be okay with that, because I'm not saying that you will lose all of it, but you could lose a lot if the earnings don't go your way. So just go into it with that understanding. But from a technical standpoint, if this ends up moving down with the rest of the market tomorrow, you could definitely end up grabbing some on the cheap around 110. So that would be my plan as far as that's concerned. All right. So KWBT, my thoughts on KWBT is that it's overpumped. Listen, we've talked about this before. We talked about this with a lot of the other ones, right? Ones that we've been really right on. So if you guys aren't familiar with what KWBT is, it is a over-the-counter penny stock. Listen, it's all over Twitter. It's all over your chat room, right? It's everywhere. At this point, who's not in KWBT, right? So if there's a catalyst that comes out on KWBT at all, everybody's just going to sell it. So if you didn't get in early on KWBT, then it's probably not going to work out for you if you end up buying it at the high. At this point, when you look at something like that, it's just got ridiculous amount of volume, and there's really no merit to it yet. In my opinion, there hasn't been a real catalyst that has come out of KWBT for me to be like, oh yeah, I'm definitely in on this game. If you look at the chart, you can see the exorbitant amount of volume that's coming on this. Let me switch over here real quick. Hold on. If you look at the chart, you can see all the volume that's come in on this thing on speculation. So what do you think is going to happen when real news comes out on this after all these people have bought in before you, right? They're going to sell. And maybe this is the outlier. But in my experience in the OTC, when you see something like this happening, there's been some front loading too. When it comes out with a catalyst, this will be a 100% sell the news, and it's not going to go anywhere. I mean, unless they come out with news that is completely mind-blowing, which again, you have to take that with a grain of salt and say, okay, maybe I take some, and if you were in it earlier, maybe I take some shares, I lock in some profit, leave some in there to see where this goes. And this isn't me bashing KWBT. It's just the facts. It's just history. When you see everybody and their mother talking about a particular ticker, that means that they're all in it. They're already in, and they've been in, and they're trying to pump this up so that more people can buy it. And then when a catalyst does come out, everybody sells it. So at this point in time, if you're seeing everybody and their mother, everybody in the chat rooms talking about KWBT, there's a lot of risk involved in that, is all I will say. And if you're going to buy it at this price point, understand the risk. Okay? So, Ken has sold his KWBT. Yeah, and I mean, like at this point, it's just everybody and their mother's in it. So I don't buy things that everybody's talking about. I get on the stuff that's laying low. There's been a couple of whispers about PASO, but that's really been it. You're not seeing it all over Twitter. You're not seeing it all over the, chat rooms and all that. So you're just seeing the volume roll in, and everybody's quiet. And that's what I look for. The unusual volume, and nobody's talking about it. Those are the stocks that you want to get into when it comes to the OTC, and that's how you win. You don't buy once everybody else is already in it. So that's my advice. That would be my opinion. If it were me looking at KWBT, I would stay away. So, yeah, Chuck. I mean, there's so many examples you could use for that. Oh my God, Andy, the ex-CEO of Andy was arrested for stock fraud. That's crazy. AMLH. Yeah, I don't think so, Nick, David, whatever your name is. Good to see you, man. Good to see you. I haven't seen you in here for some time. Good to see you, though. Blast off KWT. I mean, maybe. Like I said, it could go off. But, in my experience, usually doesn't end up happening. Too late for Tesla. Sorry, came in. No, it's not too late for Tesla, Geo. And I'm going to go ahead and let you guys go there. So comments are dropped. Oh, wait. I'm sorry. Hold on. For Bob Cade, your thoughts on China to inject $174 billion of liquidity on Monday. Honestly, I don't think it's going to happen. I I didn't say, I don't want to say, I don't think it's going to happen. I don't think it's going to impact the markets as much as everybody thinks it is. Yeah, maybe it'll slow it down, but the markets are going to come down no matter what on Monday. And again, it's just an emotional reaction. And the only thing that you need to be worrying about doing is playing off of the emotions of others and looking for good dips to buy, because there's going to be a lot of opportunities, especially because we're in earnings week. And I think all that's going to do is just set us up for even better outcomes when these earnings come out and they blow earnings out of the water. So you have everybody reacting to this virus news, and it's really not that big of a deal in the grand scheme of things. I'm not, like I said, diminishing the fact that people have lost their lives, but when you look at it as a whole with a bird's eye view, it's really not that big of a deal yet. So the market should not be the market should not be reacting the way that it is. It is an overreaction, in my opinion, still so far. So when you're looking at opportunities like this is like a perfect setup. This is a perfect storm for earnings to be coming out this week. So get your dips and enjoy the rips. All right. That's going to do it for me, guys. Thank you so much. If you're watching this at a later time, please make sure that you're leaving comments down below, as I do reply to all of the comments, and I'll get to your favorite tickers and give you my opinions on them. And I would have to say that I'm pretty fairly accurate. My record here in 2020 has been pretty spot on, especially with that Tesla call, eh? But yeah, anyways, thank you guys so much for tuning in. And yeah, if you're interested in checking out the mentorship, as people are mentioning it here, the links are in the description below. You want to go check that out. You want to be part of a community that helps other traders learn how to do this crazy and chaotic place that we call the stock market. Go check those out below. And that's going to do it for me, guys. Thank you so much for tuning in. As always, I will see you all before the bell. And B. Smith is out. Enjoy the Super Bowl.